各位先生、女士，下午好。很荣幸参加今天的论坛。Thank you very much, Nicholas. It's a great pleasure and honor for me to join you today with such a distinguished panel. My role today is just to give you a quick overview of the US-China economic relationship, and hopefully focusing a bit on China, because that's obviously where I spend most of my time. I'd like to make three broad points. I'm not married to Mrs. Ko, but I'd still like to make 3 points about China's relationship with the US in trade, investment, and then thinking about the future of China. Trade. When you first look at the US-China trade relationship, it looks super weird. When you look at what the US exports to China, you have the world's most advanced, innovative, high-tech economy exporting to the world's biggest emerging market, beans. One of the biggest exports that the US sends to China is soybeans, and in the future there'll be corn, and there's a little bit of pork that goes China's way as well. Coming back on those ships from China, the world's biggest emerging, developing economy, to America, you have iPads and iPhones and all the IT stuff. So initially it looks really very weird, but then you get into international economics and you realize that actually it's not too weird. You look at some of the other things which are flowing on those ships and you see that China is exporting a lot of cheap textiles and plastics over to the US. And of course the US is sending back a lot of waste paper. Actually the biggest export of the US to China is waste paper, which goes to China, is recycled and then sent back again. That comes to a very important point about understanding these two economies. Even though these two economies do a lot of trade with each other, they are both domestically driven economies. The idea that China is an export-driven economy needs to be dismissed. Perhaps before the crisis, you could almost make that point, but even before the crisis, the data simply didn't add up. Both these economies are large continental-sized economies which are domestically driven. The US has been driven by the consumer. China is driven by domestic investment. When you look at the role of exports in China's economy, you find that today only about 30% of all the manufacturing output in China is exported. Only 30%. 70% of the stuff that Chinese factories produced is consumed in China itself. 30% of manufacturing, that translates into about 12% of GDP. China's GDP, nearly 90% of it is domestically driven GDP. China's exports, only about 20% of those go to the US. So if you want to be sort of precise about it, something like 6% of China's manufacturing output goes to the US, and only about 2% of China's GDP is exported to the US. So these are both domestically driven economies, and of course in China's case, that will only become more so over time, and hopefully if the US is going to get out of its crisis, the US will have to become a little bit more export-oriented, but obviously that will never dominate. The second point is investment. Now, the last 20 years, you've obviously seen a huge amount of foreign direct investment into China. The total stock, if you add up just the amount of money, if you calculate it on the basis of when the money came in, you have about $1 trillion worth of capital stock in China today. If you were to go back and calculate how much all that money has appreciated, or that investment has appreciated over the last 20 years, the number will be probably several times bigger than $1 trillion. Where do American companies invest in China? Well, the first 10, maybe 20 years of their investment was all about investing, putting stuff together and exporting it out. Obviously today the story is very different. Pretty much for every $100 of FDI which goes into China, $90 is invested for sales and production for the Chinese market. And if you look at where American companies are very, very active and very successful in China, it actually tends to be in the consumer sector. GM and Ford have hugely successful joint venture car operations. You've got you wander around, even going into seventh and eighth tier cities, you'll always find an Adidas store or a Nike store. Nike's American, Adidas is German, but these guys have the most broad and widespread retail network of pretty much any company now in China, the sportswear manufacturers. Chinese don't seem to drink tea anymore. They're all drinking Starbucks, coffee in the mornings. And so it's really the success of corporate America in China is now tied intimately up with the rise of the Chinese consumer. And the success of these companies really should really make everyone question about this whole fallacy, I think, that China doesn't consume, that it's just all investment. No, underneath the investment story in China is a very strong consumption story. Now, over the next 10, 20 years, hopefully the next stage of service sector development or consumption sector development will move from stuff you can drop on your foot, things like cars and lattes, to services. And that is really where foreign investors, not just the Americans, but all foreign investors, would like to see more openness. Things like films and entertainment, legal services, accountancy services, banking services. I obviously work for a bank. We are either the first or second biggest foreign bank in China. But you put all the foreign banks in China together, and you get to less than 2% of the total banking market in China. And so the services sector is really where we hope will continue to open up, not just to the foreign investors, obviously, but also to China's private sector. That really needs to be the future of the next 10, 20 years in China. China's outward investment, not too much going to the US, but there's a lot of that is going on. Most of China's ODI, outward direct investment, is going into the developing world, and it's, no surprises here, it's focused on resources, land, minerals, and energy. But we are already seeing the initial signs, or the initial moves of Chinese corporates going into Europe and into the US to buy things like logistics services, R&D services, high-tech equipment. These things are now just beginning to occur, and of course, over time, that will just increase too. Thirdly, I'm a China economist. I spend a lot of my time running around China, trying to figure out what's going on with my team, but also a chunk of my time visiting clients here in Singapore, London, New York, talking to them about China. And it's become a cliche among us China economists that the closer you get to America, the more pessimistic hedge fund managers and money managers are about China. Actually, it's not just New York. Actually, the closer you get to Houston, Texas, the more pessimistic fund managers tend to be. Now, when I first joined Stanchart and started this job all the way back in 2004, everyone in China seemed to be really optimistic, and that cliche really held. Now it's actually quite interesting. You'll go to Houston or New York and you'll find that the pessimism is short-term. Tomorrow, China will collapse. Tomorrow, the bubble will collapse. Tomorrow, there will be a hard landing. The pessimism is very short-term. Now, when you go up to Beijing, you'll find also quite a few very thoughtful, intelligent, but pessimistic people. But their pessimism isn't about tomorrow. It's about 5 years, 10 years' time. And the pessimism has developed partly as a reason we've been hearing about just now, about the last 10 years, where although we've had tremendous growth in China, we've also had some problems which have developed. The corruption problem we're hearing about from Professor Ko, the rise of the SOEs, or the continued expansion of the state sector, the sort of the problems that the private sector has experienced. And really, when you look at the last 10 years in China, it's very hard to identify a significant, big institutional reform. And to many eyes, thoughtful people in Beijing, the last 10 years have almost been a wasted 10 years, a lost decade for China. Now, I think you just have to be very careful with this pessimism. I think that China can grow at around 7% for at least another 5 or possibly even 10 years. But the question for China is not whether, I don't think that China is going to collapse tomorrow. I think the bigger risk is that in 5, 10 years' time, the economy becomes more rigid. Crony capitalism and all the problems associated with it just become a lot worse, and the economy becomes a lot more vulnerable to shocks. There is a lot of easy growth out there in China. When you look at urbanization, we're only at 50% urbanized. It can go very easily to 60, 70%. When you look at the amount of capital stock that we have, it's clear to us that you need a lot more investment. It's not true that China needs to stop investing and just consuming. China needs to do both. It needs to build more cities, build more metro, build more airports, build more high-speed rail. There's a big capital shortage still in China. And that easy growth that you get from just people moving into the cities and building cities and getting people to be more productive when they do so, there is a lot of easy growth. And that's why we can probably grow at around 7%-ish for at least another 5, possibly 10 years. But the key for the next 5 years is to change policies so that in 5, 10 years' time, in 15 years' time, the economy can transition to a consumer-led economy. It doesn't have to happen tomorrow, but it needs to happen by 2020, 2030. And so we are really hoping, all these pessimists that you meet, not pessimists, but I think thoughtful, reasonable people who you meet in Beijing these days, everyone is hoping for great things from this new leadership team of Xi Jinping, and particularly the Premier to be Li Keqiang and his team. Can they reform the SOE sector? Can they reform the whole hukou, social services sector? Can they reform the whole fiscal system? Can they allow the private sector to really blossom and begin to enter and go into services? There are huge, huge problems in China, but we really do need to see signs of big ideas and brave reforms, economic reforms, in the next 5 years. Otherwise, I think the biggest risk for China is not hard landing tomorrow, but a much more worrying and concerning 2020. Thank you for your time.